Welcome back. Today we're going to continue the series on how to hedge against inflation. Today's topic, cryptocurrency. Cryptocurrency is a currency that is digital, that is based off of the blockchain. Each currency functions differently. We have currencies like Bitcoin that functions like digital gold. We have platforms like Ethereum that other cryptocurrencies are built off of. We have cryptocurrencies that are memes and fun that function very similar to, say, a fiat currency, where they're constantly making more and it grows as time goes on. So there's a wide variety of different options, and each coin, each blockchain functions differently. The best way to know what is the purpose and function of a cryptocurrency is to read its white papers. The white papers is basically an explanation that the creators of the currency would like the public to know of what the purpose is, what the functionality is, and it also usually will mention who's on the team that created the currency. You just Google them, you can find the white papers for each cryptocurrency. The first one was Bitcoin. With the cryptocurrency being a digital asset, and the main focus right now will focus on Bitcoin, has a fixed supply. With that, there is a finite amount of Bitcoin that can ever be created, 21 million coins. And to make more Bitcoin, you actually have to go through this proof of work process. So it costs energy to create the Bitcoin. When you have a fixed supply and market demand, this will cause the price to continue to go up. As demand for Bitcoin increases over time, the price of Bitcoin will go up. As the government prints more fiat currency, you will then be required to pay more fiat currency in exchange for a Bitcoin. As time goes on, you will have an increasing price of Bitcoin as part of your exchange. It is not considered a hard asset because it's not a physical asset in that sense, but it's known as digital gold because it functions with the same concept of gold and being a store of value, and you're using it to store value, to retain your wealth. And your wealth would technically grow as the Bitcoin price grows. And since there's a fixed supply, you have a comfort of knowing that it isn't going to be printed additional coins or dollars like fiat currency. So that is how it's hedging against inflation. And as we get towards that 21 million Bitcoin, we're, I think, roughly 4 years out before we have all the coins mined out. That is the theory. We actually don't have an exact answer because it depends on the amount of mining that's being done and other factors. It could be 4, could be 10, could be 16 years, depending on different ways you measure it. But the fixed supply is the major reason why the value goes up with inflation. It goes up as demand goes up. Hey guys, if you're enjoying the video, take this opportunity to smash the like button. This helps the YouTube algorithm, and I really appreciate it. Yes, I personally own many different types of cryptocurrency. I own Bitcoin, Ethereum, Chainlink, I own XRP, I do own some of the meme coins, and the various other coins out there. Each coin has a different functionality, and because of that, there's a different value associated to each coin. So Bitcoin, again, functions like digital gold, but things like Chainlink and other DeFi currencies, they will function in a manner that is kind of like a stock, where the value of that coin will change based off of market demand and adoption of that blockchain. So things like, say, Chainlink, that cryptocurrency has a function, and when people use it, it goes up, similar to a stock price going up. The demand goes up for that currency. It goes up and hedges against inflation in that sense. Bitcoin can function as a currency, kind of like how gold functioned as a currency, but more it's of a store of value at this point in time until we get full adoption and the full Lightning Network goes in play. So why do I invest in cryptocurrency? I do see it as a great hedge against inflation, and I also see it as the future. I believe that we are on the beginning of that ride up, and that there's significant upside over time between, I know I'm going to mention a couple of things that are new, but between Web 3.0, the metaverse, and we need cryptocurrencies to help function in that space. So we are investing in the future. And I see that when you're investing in the future, there's a lot of upside potential. It's kind of like the dot-coms. Dot-coms had a lot of upside potential, but you have to be very careful which one you pick because we don't know who's going to be the winner. Our fund offers a wallet where you can buy your own cryptocurrency on the wallet and store your coins there for future appreciation. And we'll often yield interest basically on your coins as it sits in your account. There is other options, say Coinbase or crypto.com. Those are called warm wallets. They are easily accessible from your phone and at the same time can be easily stolen if you expose yourself to that risk. There's also cold wallets where you can actually have it stored on your hard drive, download it and store it on your hard drive. That being done, you can remove it from the ability to go on the internet. So it removes the ability for someone to basically steal your coins without knowing your password. Normally these passwords are very long, they're about 16 words. So it's extremely difficult to break in, especially since you only have a certain number of opportunities before you get locked out. So cold storage is a great way to store your wealth if you have millions of dollars in cryptocurrency. One pro tip would be if you do have a significant amount of cryptocurrency, make sure that you have some in cold storage, or on our app, we're going to be offering 3-factor authentication. So there's one factor, which is you put in your password. The second factor, you would get a text message to your phone. Third factor is you would need us to approve it, also to release a certain amount of funds. By having 3-factor authentication, even if someone stole your phone, stole your password, they still wouldn't be able to get all of your money because you would have to still call in to get our third authentication to approve a large transfer. Another tip with investing in cryptocurrency is look at it long term. In the beginning, there is obviously lots of volatility, but if you look at it through a year, 2 years, 5 years, it looks very volatile. If you look at it out 10 years, you can see there's a lot of upside that's happened in the last 10 years in the cryptocurrency, specifically Bitcoin. So when you're looking long term and you're saying, I'm gonna look out 16 years from today, that will help you feel more comfortable about the short-term volatility. Do invest what you're planning to hold 5 or 10 years plus. This should not be money you're putting short-term. If you are gonna put in short-term money, it is a good idea to hold it into stable coins like USDC, where it's pegged 1-for-1 to the dollar. And in that scenario, you can choose to earn higher interest on our app and still have the ability to take the money out in a short-term basis and have less risk for the asset depreciating short-term. So that's a really good way to make money, to earn higher interest, to fight against inflation, is putting some money in stable coins if you're planning to hold short-term. Another great point is you should smash the like button. It helps the YouTube algorithm and it helps show your support. Another pro tip about cryptocurrency is they do function differently from stocks. So you can take a loss immediately the day you sell your coins. So with stocks, there's a thing called a wash sale. If you sell a stock and buy it back within 30 days, if you did have a loss, it doesn't count. It's blended back into the purchase of the stock that you did within the 30-day period. But with cryptocurrency, if you sell it that day and buy it back the next day, there isn't a wash sale. So you could technically claim a loss immediately, put it on your tax return, and then buy it back at a lower basis, and then have a lower basis as you climb up. So there is a way that you can play the game that way. Another pro tip regarding cryptocurrency is you can choose to mine, because if you set up the company properly as you're buying equipment for the company, these miners, you can use those as tax write-off to reduce your earned income elsewhere. Currently, we're offering Bitcoin mining as an investment option for our investors. It's a great opportunity to buy miners, get tax write-offs, and earn Bitcoin at under market price. So I find it a really great way to buy or to build your cryptocurrency portfolio at a wholesale price. You're not paying retail for your coins. So it's a great opportunity, plus you get a tax write-off. When the prior example, if you did take a loss on your coins, these are considered passive losses and it would only go against passive gains. So you would be limited to potentially only $3,000 a year of a loss. But if you're mining Bitcoin and you write off the machine and you have a $100,000 write-off on a machine, you could potentially use that against $100,000 of earned income, which is an immediate return for the tax savings. So it's a great way to hedge your risk, lower your tax basis, and get a higher return with a long-term gaining of additional coins. In addition to that, we offer staking, so we can get you yields on your coins. So as they're sitting in our wallet, you'll be earning interest on that money as well. So be mining Bitcoin at a reduced price, you'd be gaining the ability to have your coins appreciate in value, and you have the ability to earn interest on your coins as you're holding them and appreciating on your value. Great opportunities, and this is a limited time with very, very little supply, extremely low supply out there. So we don't have more than say 500 machines right now, and they should be gone very, very fast. So all those are interested, please DM us and we'll be happy to help you. What we know about inflation is that it is like an iceberg. We really only see the tip of it, but the weight is all underneath the surface. And as we're coming close and this inflation iceberg is coming to land, we're gonna feel more of the pressure as it comes closer. And given that, I believe we just started to see the beginning of the inflation issue that we have. It's now being said, it's not transitory. As you guys know, I never really believed it was transitory. With that, we're gonna see a minimum of 6% inflation annualized. With that being the stated figure by the government, I believe our true inflation, our real inflation, cost of meat, cost of gas, cost of water, milk, all of the necessities of life, rent, are gonna continue to go up. It's gonna cause a crunch, which will be reflected in all different asset classes. Real estate prices going up, cryptocurrencies going up. So I believe over 5 years, we should have a good rise in cryptocurrency prices. Obviously in the short term, there's always volatility. But if we look out 5-year term, I believe we're gonna be significantly higher over that period of time. And as adoption continues to grow, we're gonna continue to have higher prices. So I'm trying to accumulate as much as possible while I can at the lower prices. Based off of demand and everything that I'm hearing with all of different hedge funds and family offices accumulating massive amounts of Bitcoin, I believe that the price is set to at least double over the next 5 years, if not significantly more than that. That's my personal opinion. History doesn't repeat, but it does rhyme. And I believe that it's very clear that as you devaluate the currency, it's going to cause inflation. It is not the price of goods going up. Goods cost more, but it's really that our currency is worth less. So now it requires more of our fiat currency to buy these assets, these goods, chicken, milk, gas, rent. So with the decisions that they made with printing in 2021, roughly 25% additional money into the system, this is going to cause the price of all goods to go up. And assets prices specifically are going to see a significant rise. People who have money are going to have more of it now, right? That's what happens when you devaluate the currency, when you print more money. So if that is what's happening, those that have more now have more money that they don't really need. So where are they going to put this money? They're going to put it into stuff, assets. So you're going to see all these assets go up in value. And people are going to go into things that are tangible. Because we do have this digital space, we do have Web 3.0, we do have cryptocurrency, we do have the metaverse that's coming up. But I believe also our physical, tangible world is also going to have very high value. If you noticed prior to COVID, even prior to COVID, the demand for experience-based activities was increasing. People wanted to do stuff, outdoor stuff, because they are working online, but they also wanted existence in this world. I don't see us going fully into, say, the VR space in the sense of the goggles and we're going to be living there forever. There could be some people that are choosing to be home and be in that space a majority of the time. But I believe really what it's going to have is we're going to have a lot of AR, augmented reality, which glasses that are augmenting our reality that boost our human experience. And with that, I see digital and physical assets both go up in demand because people are alive. Thank God they're healthy. We're growing on this planet. And the fact is, there's only a finite amount of physical land. So land's going to go up in value. There's only a certain amount of water. So it's going to cost more for the water. Now, there is enough water for everyone right now, but there's a cost to cleaning and keeping up to this volume of consumption. With that, the cost of everything's going up. Now, there is ways to get around it. I'm going to pull you guys into encouraging, closing, however, whatever you want to call it. With humans and our ability to think and grow, there's a lot of opportunity for us to benefit humanity. And we just got to keep on working and being productive. Find ways to add value to society in some way, shape, or form. And eventually, if you're not being compensated for it, eventually you're going to be compensated for it because you're going to be adding so much value. There's a need for value today. With that, we're going to increase our productivity. We're going to increase our ability to supply more to everyone else. As long as we keep working, as long as we keep on adding value, we're going to be able to fix this because we have the most powerful computer on the planet and we can find solutions. Cryptocurrency, Web 3.0, the metaverse isn't going to take away. Just like computers didn't take away our jobs, just like machines didn't take away our factory workers. Is there less? Yes, there's less. But there is, because each person is now had the ability to be more productive. We still need a lot of factory workers. We don't have enough. We don't have enough skilled workers. So that's the focus. The focus is we still need more workers. But if you think positively and think, okay, where can I add value with my skills? Where is there a need and demand? Because there's a lot of need out there for skilled workers in different fields. So just go out there and find where you enjoy doing, and there's definitely a lot of opportunity there. Hey guys, the link below will provide you the opportunity to sign up for our newsletter, and there's a lot of great exclusive content just for you guys. So sign up below to our newsletter, get a lot of exclusive content, and I'll see you next time.